But let's try and understand the China puzzle a little bit better. What could it mean really for India and, of course, other emerging markets? Shaun Rein, China market expert, joins us on the show right now. Shaun, hi, afternoon. Thanks for taking the time out and speaking with us today. How meaningful, Shaun, does it seem like the China story could be after the slew of stimulus that one has seen? Because it really seems like whatever it takes, make or break kind of movement going by the PBOC action last week.
It's great to be here. If your viewers know about my background, I'm American, but I've been in China for 27 years. And there are really only two times that I became extremely desperate and anxious about the economy. The first was in October 2022, when China was at the height of the zero COVID madness. The second time was in August and September of this year. Business and consumer confidence plummeted. You look, youth unemployment hit 18.8%. Secondhand sales for homes dropped 8% in terms of value. So the Chinese government had to launch what I consider to be a mini bazooka-like stimulus right before the golden holidays in order to try to rebuild confidence amongst and animal spirits amongst the wealthy consumers, to try to get the economy going again, get consumer confidence moving so that you could see businesses invest more and consumers, at least at the wealthier level, go out and shop more. So they launched the stimulus. I've been recommending to all of my clients to buy Chinese equities. I still think we have 1 to 3 weeks minimum where prices are going to continue to go up because the valuations were too low. Let's be honest. In September, valuations at a P ratio were down to 8-9 times. Now it's around 12-13. Japan is at 18. So I still think we have 10-20% movement on the positive side for Chinese equities minimum in the next 1 to 3 weeks, because the government has to get confidence back, get people like me who are super anxious in August and September confident in spending again.
The popular belief is that the money that's flowing to China is but tactical in nature. Do you also believe so?
Yeah, it's tactical because what's happening is the government doesn't want to reinflate the real estate bubble. That's why the real estate prices drop 20-30%. The government doesn't want to reinflate that because that could cause a systemic risk to the country's financial system. I believe that the government wants to strengthen the capital markets over the short, medium, and long term, because you need a healthy capital markets in order to have a thriving economy. So the government wants to let everyone know. We've spent 8-9 months. They just appointed Wu Qing to be the head of the CSRC earlier this year. Since they've appointed him, they want to let everyone know we're auditing all the companies. We're cleaning up all the fraud. We're cleaning up all of the corruption because we want Chinese to be able to increase their overall net worths over the next several decades by being able to invest not in real estate, but in equities. If you look at it, in China, only about 10% of the population buys equities versus 70% in the United States. So the government clearly wants to have a mini bazooka-like stimulus into the equity market in order to have a stronger economy, in order to get consumer confidence growing. Now, I don't know if this mini stimulus is enough to improve the economy. That's why hopefully tomorrow the NDRC is having a meeting in the afternoon so that we're hoping we'll launch a fiscal stimulus, because everything so far has been based on the monetary side to improve the equity market. But again, as I said, youth unemployment is 18.8%, fixed asset investment on the private side is near zero. So we need to get the real economy growing. So we're all waiting to see, is tomorrow going to be the time where a fiscal mini bazooka-like stimulus is launched? That's really important because the country is facing structural issues. And let's not forget, it's facing major geopolitical tension between the United States, where the Biden regime is trying to contain China's economic growth. And really, unfortunately, China and India can't seem to get on good relations. It would be great if India and China could get on good relations, because that would help the economies of over 2 billion people. I don't understand the tension at all between the two countries. People are fighting over some stupid rocks.
Fair enough. Point taken, Shaun. But you're talking about the mini bazooka that Street is watching out for tomorrow. If it doesn't happen, do you see any of these, this rally getting undone?
If the measures tomorrow are not clear, if it's a lot of lack of clarity, if it's not big, then the rally could come undone. because right now there's a lot of, when I talk with hedge funds in the United States and Europe, there's a lot of wondering, is this a dead cat bounce like, in Japan during their decades of stagflation and stagnation? You basically saw 4 periods where the equity markets went up, but then they collapse again. And there are a lot of Western investors that are very cautious and they think this is a dead cat bounce. I tend to be a little bit more optimistic and think we have 1 to 3 weeks minimum where we could go up 10, 20%. But let me be clear, if you're an investor, I would not be putting money into Chinese equities and holding it for 5 years. You can't do that in China. You've got to put money in. You got to look day to day. Maybe you should get out after a week. Maybe you should get out after a month. You got to remember, JD.com, one of the biggest retail, hit around 96 Hong Kong dollars per share. Right now it's around 180. So it doubled in the last 2 weeks. That's a little frothy to me. 2 weeks ago, Walmart, one of the biggest investors in JD, sold their entire stake in the entire company for a little over $1 billion. So they left $1 billion off the table. So there's still a lot of bears out there. There's still a lot of people in the West who don't believe this is a real sustainable bull market. Again, I think tomorrow we're going to hear a lot. That's going to be key for the NDRC to instill confidence by saying we have a fiscal stimulus aside from just monetary.
Okay, so, but then given the fact that there is so much under ownership and disbelief about the Chinese market, why are you perhaps just saying that another 10-20% in a couple of weeks? Why don't you see it as a bit more long-term in nature? Because there is a lot of money which is waiting by, and clearly a lot of people are underinvested in China.
Yeah, absolutely. I'm saying 10-20% minimum in the next 1 to 3 weeks, but you got to keep your eyes on the ball, right? China is something that there's a lot of volatility. You might see people who bought JD or Billy got double their value in the last week, and they say they want to take profits and get money off the table. There's still a lot of fear from Western investors, which I think is misguided fear, that China is uninvestable. A lot of people think Xi Jinping and the CPC are anti-rich, anti-business, and we're turning back to a 1960s, 1970s Maoist type era. I disagree with that. The reality, though, is most Western investors, even the ones that invest in China, are completely ill-informed about what's going on in China. They were locked out for 3-4 years because of zero COVID. They've been misinformed by Bloomberg and Western media outlets that China is uninvestable. I actually had a call today with a hedge fund investor based in the US, and he asked me, Shaun, is it safe for me to come and visit China, or am I going to get arrested? So there's so much misinformation, xenophobia that's being spread about the country that investors need to be cautious, and you can't say we've got a 6-month movement. I'm going to say 1 to 3 weeks minimum, could be longer than that. But if you get 20% gain in 3 weeks, take your money off the table.
The money off the table. But Shaun, in those conversations with those hedge fund managers, did India find mention as well? How they're looking at India, if at all?
Look, I want to be clear. When it comes to China, I'm the best in the business. You've seen my track record for 25 years. I've called it way more right than wrong. I am not an expert on India, so I don't want to mislead the audience. What I will say is a lot of investors thought that China was so uninvestable that they started investing in India and Japan, not because they believed in India and Japan, but more they didn't believe in China. So I think you're going to see a pullback, especially from the Japanese markets, because I think it's too frothy there. You have an 18 PE, even though you've got an economy that's barely growing, if growing at all. So I think India's going to I think Japan's going to come down. That money's going to flood into the Chinese equity markets. India has been hot the last couple months. Obviously over the last decade, it's outperformed the Chinese equity markets, but I think India has a chance to come down a little bit in the next couple weeks as people reallocate and chase alpha in the Chinese markets. So India is still good over the long term, but in the shorter term, there might be a pullback.
Okay, point taken. Thanks, Shaun, for making time and speaking with us. We will speak with you perhaps in a couple more weeks to see what really happens and how it really pans out. So that's the latest on China. Expect at least 10-20% bounce further from where we are.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.